Welcome to the Veronica Edwards Show, where we have fun financial conversations that everyone listening can apply to their personal and professional life. I'm your host, Veronica Edwards, CPA, and today we are back, season 6, completely independent and sponsored by yours truly, Balance Virtually, LLC, my accounting and consulting business. So at the top of every show, I always want to shout out the V team. We have close to 12,000 views between our long form videos and our shorts on YouTube. Boop, boop, boop. Excited about that. We're up to 63 subscribers. We are shooting for 100 this season. So if anyone is wanting to be a sponsor, a guest, or you're just a loyal listener, please like and subscribe to the page and head over to balancevirtually.com or veronicaedwards.buzzsprout.com for prior shows and just information about the show. So today's show, I'm always excited to have our CPA chat, and I'm joined by my good friend and fellow CPA with over 20 years of experience, owner of Amplify Accounting and Consulting, Miss Alanna Anthony. Hello, Alanna.
Hello, thanks for having me again. I'm glad to be back. I missed
Yes.
y'all.
I missed you too. This is Elena's first time back this season. I'm for the first time on location. You can see in the background, I'm at my beautiful mother's house in Ladson, South Carolina. That is close to Somerville in the Low Country. So I hope everything turns out well. But Alanna, give us a little update before we get into the topic today. How have you been in the last few months over the summer since the last time you've been on the show?
So it's been busy, but it's been good. Like I got to participate in a mastermind in May. We've had a few, family situations going on, but we've made it through. And then I've joked around all July. We were Airbnb. All the family
Okay.
came to visit I think we had one weekend. One free weekend. I think our last guest was in August. So now we're getting back in the groove
Wow.
of things.
Yes. Now, what's mastermind?
So I am in a tax planning mastermind. So basically it's a bunch of different, some people are like accountants, CPAs, EAs, but then some people like they are more so like in the financial space, but more so like insurance or financial advisors. And so we all kind of work together to really like enhance our tax planning strategies, our skills, make sure that we know better. And then we kind of rely on each other when, it's a new situation. Like, do you have any advice on this or do you have a connection? So yeah, I got to go down to Harlingen, Texas. Never knew it
Never heard
existed
of
until,
that.
but it was very interesting experience. The food was good. The Mexican food was very good.
Well, you were down
And
there basically in
oh,
Mexico.
very close
So
to the
now,
border.
Elaine,
Very close to the
do you have
border.
did you have to pay for this is my question. Is this
Yeah, I
like
had to pay
a
for this
group?
mastermind, but it's been worth it.
Okay.
It's definitely been worth it. Like the skills
And
I've
how long are you in it for? This is
so
cool.
it's normally like a 6-month run.
Okay.
So I don't know if I'm a renew, nothing bad.
Right.
Reason why I wouldn't renew. It's just, got a lot going on as I mentioned on the home front. But I
Uh-huh.
love it. Like even if I don't, I'll probably come back. I just need a little
I
moment.
forgot what they call them down here, but there's like these different professional networking groups. But to me, they just meet and they just kind of do their elevator pitch in person. And I'm like, I like what you're saying, where it's more of like strategy, iron sharpening iron.
Mhm.
And then I'm sure you guys will start referencing each other for referrals, so
Exactly.
that's nice.
Exactly. It's good to
Okay.
know people who are like more like have their own like was it niche, right? So if they have a niche working with a certain type of client and that's
Mm-hmm.
something that I always like to joke and say outside of my pay grade, then of course then I would like to refer
Yes.
them. And same. People are like open to share with you. So it's really good. I really enjoy it.
No, that's a good tip for solopreneurs like ourselves. You have to have a group of consultants and people that you can refer people to. So I definitely recommend people finding a mastermind group or something like that in their area. Elena is in New York City, in the big city, but I know every metropolitan, every town has one of these networking groups. So cool. Well, today, ooh, Elena, I was like, girl, this is kind of
Boring.
real
Look,
accounting
look
stuff we're talking
boring.
about today. Boring. Yes, I didn't want to say that, but yes, we are unpacking the One Big Beautiful Bill Act, which was a massive law passed this summer that touches payroll, benefits, 1099s, tips, and more. So we want to go over what it is, who it affects, when does it start, or if it, as I said, it started this summer, but most importantly, how should small business owners prepare for this? So, sis, I'm handing this 100% over to you because it is past my pay grade. So please walk us through the big, beautiful bill, and let's see if it's actually a beautiful bill after we finish discussing it. So can you tell us, what is it?
Okay, so I'm gonna say this first of all. It just depends on what side of the bill you're on. Because
True.
there are some things that are for business owners, and there's some things that are for just regular individuals, like Americans who have a W-2. But there's certain things that just,
Right,
like,
right.
there's some things that are good, and then there's some things that are depending on what tax bracket you're in, whether or not you feel like
That
it
part.
benefits you. And so I always try to tell people that, because some of it I don't personally feel like it's good for, others, but
Mhm,
let's
mhm.
talk about it. We're gonna go into the
Yes.
stuff for small business owners, of course, on here, because that is the audience here, and we wanna make sure you know things that benefit you in some type of way.
Yes.
So the big beautiful bill is also known as HR1. I wanna put that out there, because a lot of times
Is that
you may hear someone say HR1 over the big beautiful bill, but basically it is a whole tax law change. I know y'all remember the Tax Cuts and Jobs Act. That a lot of those benefits, I'll say, some are not
Mhm.
benefits, but a lot of those were set to expire at the end of 2025. So the
Yes.
big beautiful bill came in, added some new stuff, but also made some of those benefits permanent. And it changed a few things. So not necessarily a bad thing, but it went into law July 4th, 2025. Some of the items are not going to go into effect until like 2026, some things like 2027. Some
I
items
saw
went
that.
into effect immediately. Some items went back and went into effect either January 1. One of the items went into
Mm,
effect January 21st. Little confusing,
interesting.
but
Yes, yes.
thank goodness there's lots of information out there. So let's talk
And
about.
Elena, real quick, I
Mhm.
just want to add for those watching, Elena's looking at her other
Oh,
screen. So
yeah.
if you see her turning, don't think she has a crick in
Oh,
her
no, no,
neck.
no.
We were doing double screens here
Yeah,
today. It's the
we're looking
big,
at our
beautiful
other
bill.
screen, because if you think that
Yes.
I remember everything in that bill, that is not my
Yes.
skill set to remember everything in the bill.
And business owners know that because sometimes people get overwhelmed in an industry, especially tax law. And I'm
Yes,
like, we don't remember all this. We know where to reference
we
it.
exactly, every single time. Just know that I'm gonna reference it. I may know some stuff off the top of my head, some stuff I won't.
Right. Right.
Okay, so here's a few things. So they changed 1099 reporting, which I really think is going to be a good thing for a lot of business owners. So they've changed that from being a minimum that you have to issue a 1099 for a $600 or more payment. Now it's $2,000 or more.
Girl, when did that take
That
effect?
took effect immediately.
I did not know
Yes.
that. Oh,
So
wow. Okay, that's
that's really
huge.
good, because actually it will also possibly save some money for small business owners, because of course you got to pay to have your 1099s issued. And
Yes,
if it's $600 is pretty low, but at
it
$2,000
is.
that may eliminate a lot of people. I know it definitely is helping me out, so I appreciate it.
Absolutely, and I also wanna add they changed in recent having the NEC versus the miscellaneous form, and they
Hmm.
also were saying that the 1099s have to be filed electronically if you had 10 or more.
Yeah.
So I feel the IRS is getting a way of paper items for 990s. That's your, nonprofit tax form. That has to be filed electronically. That got a lot of people tripped up. Did anything change with that, Elena, that you're aware of, or did it just change the dollar threshold, but you still have to file things if it's electronic versus paper as it was
So
before?
they really want it electronic. The IRS is working towards becoming fully electronic. Now, some things are taking a little longer than others. And I always joke around that the government's very slow, but
Yes.
they
Yes,
are
they
trying
are.
to make things electronic, just because truthfully it's safer for you, is and also it just helps reduce any issues that may occur, like with trying to send things through the mail. So they are pushing for all of those items to be electronic.
And I feel like it helps you from fraud, you
Yes,
know?
completely. Because if that type of information gets lost with people's socials on it, with your company's EIN, it can just
Mhm.
really cause a lot of problems. And the way the scammers are set up these days, they do a lot of things
Yes.
that you would not imagine they would do.
Yeah.
So,
I had a client where they were getting scammed with someone impersonating that they were QuickBooks saying, "Oh, we can't reconnect your bank. Please go to this website." So, and I was like, "No, no, 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 no,
right.
no." So yeah, they're getting really smart, really smart. Oh, I'm excited now. At first I thought this was going to be dry. This is getting juicy.
All right.
1099s, 2000. Whoa. All right,
Okay,
let's keep it
next
rolling.
thing is the 1099K. So, there's been this big thing that if you take payments through like PayPal, Venmo, Cash App, I'm trying to think who else is out there.
Outside of a debit or cash, it's like all credit
All credit
cards
cards,
payments.
right. So
Mhm.
before it was $20,000 and 200 transactions, you'll get a 1099K that's gonna tell you how much money you have received through these sources. They were
Mhm.
trying to change it to $600, and they have been trying since around, like, 2021. Around that
Mhm.
time.
So they're trying to get it the same as a regular 1099 NEC
Yeah,
or
and I
miscellaneous.
mean, we know why. There was a lot of businesses that came out of the woodworks with the PPP loan, with the EIDL loan, and so they were trying to get a better handle on that, but they kept pushing it
Mhm.
back because it was very hard for a lot of those payment processors and the IRS. Like, the IRS kept pushing
Mhm.
it back because they could not prepare for it. It was just a lot.
Right.
And so they have returned that back to what they had previously. So 1099K is now $20,000 and 200 transactions. You'll have to issue that, or you will get one as a business owner. So just keep that in mind.
So, Elena, I have to ask because I have to put that fraud hat on too. So I'll get people that'll say, "Don't pay me out of your checkings account. Pay me via the credit card." So, not that we want to do this, but can people skirt the system if they say, "Oh, I want to get paid more than 2,000, but I can have people pay me up to 20,000 if they pay me via credit card and I still won't have to report it to the IRS." Is that correct?
Yeah, people will try to skirt the system. It's just
I know we can't. I always tell people, I'm not advising you to
I
do
wouldn't
this.
do
As
it.
your CPA, right.
Because what they don't think about, like, thinking back, right? What they don't think about is when something does happen, not that we want anything to happen again where we need PPP loans and EIDL loans, but all of a sudden,
Sometimes I do, Elena. Sometimes I want to
I mean, it was
get
beneficial.
that child deduction too. Right.
But what happens is now, like, it's like, oh, you have a business, or sometimes what people don't realize, especially small business owners, you, okay, you're not reporting that on your taxes. So when you do have to prove that your business is making money, when you want to purchase something
Hmm.
big, now you have no income.
I tell people that all the time. It's a fine line with showing not enough income for taxes, but then you don't have enough income for grants, loans, financial aid for your children. You got to know how to play the game.
Exactly. And really, instead of just not claiming things on your taxes, you really need to get with someone who does tax planning so that you can make it work for you, because there is an easy way to do it. It's just that a lot of people think it's not accessible, but it is.
Yeah, so please reach out to Amplify Accounting and
Definitely
Consulting
with you.
with Elena Anthony. All
We will
right.
get you
All right.
together.
Yeah. So what else do we have on the
Okay, let's
list?
talk about this no tax on tips and overtime.
Hmm?
Okay.
Let me find out.
There's no tax on tips and overtime. But here's the thing that most people I've talked to do not understand. It's still you're still going to be taxed on tips and overtime during the year. You
What?
so as an employer, you don't change anything about your process. It is actually the employee's duty to, when they file their taxes, to distinguish what the tips and overtime is. Now, as the employer, of course, there's going to be a different section. There's always a different section for tips. Now the
Mhm.
overtime piece, I wanna see how they're gonna handle that piece. That piece is still kind
Okay.
of like we're all watching to see, like, are you gonna now put that in that same box with tips? Because how will we
Right.
distinguish what was the overtime versus your regular pay? But the employee has to actually say, "This was overtime," or "This was tips," and then get that tax money
Okay.
back.
Got it.
Yeah,
That honor policy
yeah.
again. Got it.
And hopefully they know, because especially for the people who do their own taxes, like, and if they work overtime or they get tips, they may not understand. So,
Yeah, that's very confusing.
yeah.
Got it.
Okay, next is the dependent care and childcare enhancement. So they have bigger enhancements for that as far as it's going to help employers get a larger write off when it comes
Hmm.
to if they provide childcare services, but then also if you have like the dependent care flexible spending account, which has been my favorite thing in life as a parent.
Mm.
um for the employer, they raise the amount. So we'll get into the amounts in a little bit, but they raise the amount. So is now you get a little more tax-free money,
Okay.
because a lot of people don't realize when you have a flexible spending account, it is tax-free. And so it
Mhm.
reduces your taxable income. From the employer perspective, they also need to know that so that they code it correctly when it comes to the employee's W-2.
So I think, Elena, we'll need to have a whole show on flexible spend accounts because I'm familiar with medical
Mhm.
flexible spend accounts. I didn't realize there's these spend accounts for childcare
Oh, amazing.
because I just thought we couldn't deduct it. Everything I'm like, oh, I can't deduct childcare.
Oh, wait a minute. You think you can deduct childcare?
Well, because I make a certain amount, and then
Well,
there's
yeah.
always a percentage of your income, and it never seems like it ends up being anything.
Yes.
So, but it sounds like you said that's your favorite. So when
It's
you
my
say that, I'm
favorite.
like,
Yeah,
ooh,
it's my favorite. So it's not necessarily so depending on where you are tax bracket wise, it does phase out as far as being deductible. But if you have a dependent care flexible spending account, that money comes out pre-tax. So similar to your
ooh.
401k, it
Mm-hmm.
reduces your
Mm-hmm.
income. So now you're
Mm.
paying for your
Yeah, we gotta
child
talk.
care from tax-free money. And there's a way to
Yes.
work it. So we'll have to do something about it because
Mm.
I love it. That was one of my favorite things when my kid was young. I loved it. It helped me out a lot. So,
Oh, I got a 10-year-old, so I wanna add that, and also it made me think about another show about the self-employment, like, pension plans, retirement
yes.
plans. I personally need to know more about that for my clients, so I get that question a lot, and we definitely wanna air that before the end of the year,
Okay,
so
so definitely.
I'm taking my notes.
Yes,
I'm taking my
yes,
notes.
yes, we'll do that next. The next is
Yes.
the educational and student loan benefits. So we know that now employers are able to help you pay off your student loans. They're able to contribute to your student loans, and it's tax free, but that was temporarily. You know how they do. It was temporary. It was set to
Mhm.
expire,
Mhm.
but now it is permanent. And the really good thing about it is it's going to be set to be indexed. So basically, when it's indexed, that means that they will be making adjustments based on cost of living, inflation. So that'll be great because we know that a dollar yesterday is not the same as a dollar today. So we
Period.
want that to be able to move because previously, um, even when they were helping out with things like that, like the amount that they were paying was just not like, it's helpful. We like offering money.
Mhm.
But
Mhm.
from a employer's perspective, like, if they are contributing that money, they know that, like, okay, if we can get a larger write-off, they're more apt to do it. But then also from the employee's perspective, like, if the economy is changing, possibly depending on your student loans, maybe your interest rate changes because they reevaluate that, I think about every year.
How is this
You want
legal?
you wanna make sure that it is also the amount that employers can help contribute increases also.
Got it. Wow. Okay, that's a good one.
And then the last thing is the excess business loss, and this is really helpful for pass-through, business owners, so S corps, partnerships, LLCs. The excess business losses have, been made permanent, so the cap is for if you're single is $313,000. If you are married filing jointly, it is 626. So basically double. And so that was something that was set to expire, and now that's permanent. And they claim that it may be indexed, but we'll see.
Right. We'll see about
Yeah.
that. Another question when you talked about business entity structures, I want to get clarification on the whole S corp thing.
Okay.
I was told S corp is a tax designation. It's not the type of entity. So you can have an LLC that's taxed as an S corp, but you just don't have an S corp.
That's true.
Is that
Well,
correct?
you can have an S corp that is just an S corp. And you can have an
Okay.
LLC that is taxed as an S corp. So there
Are two
there
different
are
things.
two
So,
different,
okay.
but they're basically the same.
Right. I tell all my clients to just be an LLC tax as an S corp,
Yes.
and then no one really does C corp. But that's where I was just curious.
No, yeah,
So I
you
was
can
like,
have, there's some businesses that start out from the beginning as an S corp, and you can be just strictly an S corp. But then there are the LLCs. You start out as an LLC, you realize that you're starting to make money, and it's more tax advantageous for you to become taxed as an S corp. So instead of completely converting to an S corp,
right.
you can just change your tax designation to be taxed as an
Yep.
S corp. And
Okay.
basically just the difference is now it's separate. Because that's a lot of business owners, they don't think that way, but I want them to. If you have a completely different S corp, even if you have a partnership, that is not you, the person.
Right.
So if it's Alanna,
Yes.
it's not Alanna the person. Alanna is one individual, and if Amplify Accounting and Consulting is an S corp, that is a whole different business, completely separate from me, and it's going to pay me payroll, but it's also going to pay taxes, my half of the employment taxes, and that's kind of like the difference
Right.
there.
Gotcha. Gotcha. All right. I know I've been all over, but
That's
I'm
okay.
like, oh, all of these things are hitting different tax laws. So we mentioned that a lot of these took effect immediately, or they'll take effect as of the end of the year. Can you highlight? There was a few that you said might not be until 2026 or 2027, or some that went back.
Okay. So for the 1099s, all of that went back to the actual beginning of the year. But the one piece that you should keep a thought on, which I feel like nobody should have done this, but again, if you're doing your own taxes, or unfortunately, if you're, the person who prepared your taxes wasn't abreast of it. For the 1099Ks, they basically retroactively went back to 2022 because there were companies who were trying to comply, and they just sent it because they were so confused about what was going on. They sent it anyway,
Right.
but they really didn't necessarily need to send it. But everything goes into effect 2025 going forward for the
Got it. Got
1099s.
it.
Now, for the dependent care assistance programs that they have out there, all of that will starting at the end. They always say December 31st, 2025, but January 1st of
Right.
2026.
Post
Yes.
25. Right. Got
The
it.
employer childcare credit, that is going to start after 2025 is over, so January 1st.
Got it. Okay.
The student loan payments is also January 1st of 2026. And I will say that let me correct this. The business excess loss is going permanent after December 31st, 2026. And the reason why they did that is because that's how long it was supposed to last in the first place. So they're
Gotcha.
giving you room, basically, instead of just saying like, oh, it's going to expire, it's actually just going permanent at that point. So, and then they have a little few other things that we haven't talked about, but some of them kick in like 2027, but don't worry about those yet. We'll talk about those close to time.
Yes. And Alanna, I'm sure you and other tax CPAs, this will all be updated in your tax software. This will be communicated out. I'm going to make sure that I communicate it to all my clients now that we're in the last quarter of the year. But for if any reason someone's like, oh, I hope I don't mess up. If you use TurboTax, that should be
It
updated.
should be
Like all the
updated.
software will be automatically updated for
It
you
should be
guys.
updated. What I will say though, if you do feel like you qualify for something, you don't have to get in deep about it, but just try to make sure you have a quick understanding, just because if you're doing your own taxes, I want you to be able to recognize that something's not right. Because what we know about all technology, it all has a little issue at
Yes,
some point.
it absolutely
Yeah, so
does.
you wanna just make sure that you recognize that, like, "Wait a minute, something's off here," if it
Mhm.
doesn't do what we expect it to do.
Yes, and we always give the disclaimer on the show, talk to your CPA, your payroll provider, your benefits administrator, all the things, anybody that supports you with your taxes, with your HR items. Of course, you can reach out to Elena at Amplify Accounting, myself, as well as at Balance Virtually. But ultimately, this is the time that you want to start getting organized.
Yeah.
So, Elena, I would love just in general, before we leave out, what are things that you usually tell people that they should be doing at this time of the year so they're not panicked when they get into the new year?
Okay, please get your books together. If your books are not cleaned up, please clean up your books through this point. So you're listening to this. This is airing October 30th of 2025. Please get your books together. Even if you're hearing this later and your books are not together, please get your books together. Because
Yes, before the end of the year.
that is going to help you know where you stand. Actually, it's gonna also help you make decisions, and that's kinda like the big thing. But from a tax perspective, you need to see where you are profit-wise, or whether or not, like, you need to make some adjustments when it comes to, like, tax planning. So I would say get your books together first. If you have questions about certain situations, do not like I always tell people and like Veronica said, you could reach out to one of us, but you also can reach out to someone else. Do not feel like you don't want to pay for an hour session for a consultation with your CPA, an EA, a tax preparer, someone to get a better understanding, especially if you're doing things yourself or if
Mhm,
you're trying to make a decision.
mhm,
Because sometimes as business owners, you're doing a lot. And I understand that you're not necessarily like this is may not be your sweet spot. So
right.
talk to someone who specializes in taxes to make a decision on whether or not you should do something or not. Because we've talked about this before. If you haven't, you should go check out our other episodes. Okay, they were really good.
Please,
We've talked
please.
about people making decisions that were not advantageous to them tax wise at the end of the year because they didn't have an understanding of where they stood financially because their books weren't done.
Yes. And I learn something new every time. And one of the biggest things from prior shows that stands out to me too, Elaine, is how you said on the IRS website, there's a whole tax calculator.
Oh,
If you have your paperwork and it's free, and also if you have your prior year taxes, they usually have a comparative. So that's how something can stand out to you if something got calculated wrong. So before you ever file your taxes, always look at the last 2 years. So then if there are changes, you're like, oh yeah, I did switch jobs or I did this business change, but you have to look at the trends. It's very hard, at times to just say with a blind eye, "Oh, everything looks good." Like, you need to compare. That's what accounting is all about. But Elena, we're already to the end of the show. You made this fun. I was really like,
was
the big
it?
beautiful bill. It was. I'm excited about this $2,000. I'm excited about the flexible spending accounts, things that we will talk about. So, Elena, can you please tell the listeners and those watching how they can reach out to you because you provide virtual services. I'm always sending people your way. So, how can they reach out to you and what are some services that you provide?
Well, first of all, thank you for sending people my way. But you can reach out to me at www.amplifyac.com. And you can also find me on Instagram under Alanna Anthony. But some of the services that I provide, of course, tax preparation, but also I specialize in tax planning. So basically, during the year, so let's say 2025, looking for ways to help you reduce your taxable income, especially if you typically owe like more than $10,000 or more in taxes every year. I help you set up for a way to implement some strategies because there's strategies out there that can help you, that can benefit you, so that you can really set your business up the way you want to be. You don't want to be the person who you're working hard in your business all year, and because you pay so much in taxes, you're not benefiting for the profit.
Mhm. And one thing I wanna add, as business owners, a lot of times we don't want to talk about price, but I do want to emphasize the value of tax planning. So, Elena, how does that work? Is it an hourly rate? Do you feel like at a minimum you have to work with people a couple of sessions to really get to understand their books to plan, or can you just book an hour with Amplify Accounting and now we have a tax strategy?
Okay, so basically how it works is, well, normally my process is I'll have a discussion with you first. It's a free session, it's 30 minutes. I'm getting in your business. That's why I like to joke. I like
Yes,
to get an
that's what I tell people.
understanding of like what you owe, who you've been working with, things you've done before, the goals you actually have, like your true like dream, what you want to happen, whether or not you want to sell your business or buy another business or invest in things, whether or not you want to be in a position where your business is running on its own and you're spending more time with your family and traveling, things like that. So
Mhm.
from there, then I typically offer my tax assessment. My tax assessment, which is what is the plan, is $2,500 and then from there, if you accept it, what we actually go through is we spend some time together. We have another meeting. It's normally, I would say, depending on the person and how much information they have readily available, it's about an hour. I have done an hour and a half, but that person was like grabbing stuff and trying to find information.
Mhm.
But I'm really finding out a lot of information then. Like I'm asking you about, your life insurance. What investments do you have? How much does your business typically make? Do you have any real estate investments? Are you looking to invest in real estate? Kind of what's your overall goal, what you want for your family. I'm really like getting into all your business.
Mhm.
Yeah.
Therapy.
Yes, I'm getting to all your business because all my tax plans are customized. So I'm going to
Mhm.
look for things that are going to help you get to where you want to be and like where you see yourself. So I'm even going to ask you like,
Mhm.
where do you see yourself in 5 years and 10 years and 15 years? Because
Strategy.
I can't build a good tax plan for you without really knowing that. Like, even if you haven't thought about it, even if you tell me I want financial freedom, then your tax plan is going to go that way. Right.
Mm.
And then some people, they're like, well, I'm looking to build wealth and I'm looking to, like, I spoke to a person who this this person has like a little mini real estate empire and they're on their way to building more, and so they wanted to make
Wow.
that work for them while also buying other businesses because they also worked, they were doing a lot, but it was amazing because they were getting it done and it was successful, and basically they wanted to travel with their kids, like that was their goal. So we built it
Yes.
that way. So then I build out the tax plan after we meet, and normally I have the tax plan done within 7 days after that. I may reach out for more questions just because I may see something that may be good for you. And I'm like, let me make sure
Mhm.
this works for this person. But then we meet
Right.
again and I present you with your full tax plan that is yours to take. Now, from that point, you can either take your tax plan and implement it yourself, or I can help you implement it. And I do give an offer like, okay, this is how much it costs for me to help you implement it. But like I said, it's still your tax plan. You get that tax plan regardless. And so you can
Mhm.
go, if you already have someone who is helping you, that person can help you, and that's fine. Or we can work together and I can help you implement it so that you make sure that you have done everything that needs to be done. And during that time, like we are meeting mostly on a quarterly basis. I'm making sure things are getting
Mhm.
done, things are implemented. Because what I hate is that you pay for a tax plan and then you don't save any taxes because you don't implement.
Mm. And when you mentioned, like, say, the 2,500, in my mind, I start breaking it down. That's just $200 a month. It's an investment in you.
Right.
You could put that on a credit card, pay it off in a year because it's going to save you thousands, hundreds of
And if you're a
thousands
business
in
owner,
the
it's a
long
write
run.
off.
Exactly. Well, thank you so much. Like, I get
I know.
excited. I, I, I feel like I'm low key a tax CPA. I want to be, but I'm scared. But I'm thinking that might be my retirement,
Yes. Come on over,
thing when I'm
girl.
traveling. Come on, train me, Elena, train me. Well, thank you so much, as always, Miss Anthony, for coming
You're
on and providing your
welcome.
expertise. And thank you to the V team and everybody tuning into the Veronica Edwards Show. Don't forget to like and subscribe to YouTube and Buzzsprout so you never miss an episode. And until next time, stay balanced and financially savvy.